What's up, traders? Welcome back to the channel. So we didn't have a whole lot going on last week. We're going to talk about what Bitcoin did, what the risk markets did, and what I'm expecting to happen coming up. I'm going to give you both the bearish and the bullish case for this week coming up. So that way, hopefully you guys can get into some really good trades, maybe see your P&L grow all week next week. So make sure you stick around. Here we go over here on Bitcoin. First, I'm going to go with what little bullish cases there are in the marketplace right now. Generally, when I'm looking at moving averages and when I'm looking at the RSI, I generally don't look at those two indicators on anything smaller than a daily time frame. But you can see here on the 4-hour time frame that there is some positivity happening on momentum. It's not really as momentous as it looks like it is, but the indicator is saying that it is. As of right now, we are testing the March open. As I'm making this video, today is March the 15th. That is literally halfway through March's range. You see this red Fibonacci here? That is for the entire range of March. As you can see, as of right now, it's just slightly green on the month, but there's a clear and obvious trend in the month. All right. I don't want you to focus on any of this price action over here. I just want you to focus right here over, because this is the beginning of March. We're in March. So all we really care about right now is March's price action. We did come in after we broke out above the 40 here, which is good. That's typically what you want to see. And then we kind of retested it right here, bouncing back down for a couple days. On this day right here, this was Thursday, this was a bear trap. I will show you that on the daily, but it did look like we were going to break back down, and it did look like Bitcoin was going to take out this swing low that was put in on March the 10th. So as of right now, this is the yearly low and March's low. All right, with that being said, you can see yesterday we got a nice bullish reaction off of that 40 on the 4-hour time frame. This is a session volume profile. The volume nodes are each one of these bars right here, and there are two colors that make up the bar. Blue is buys, yellow is asks. So blue is bid, yellow is ask. So when you see a lot of yellow like this as prices shooting down lower, in a lot of cases, depending on what happens after, right? After, if we would have got downside continuation, then one could say, yeah, that was probably more sell side than buy side. But since we got upside continuation after, then we can make an accurate assessment that this was probably a lot of people buying the market and getting stopped out, right? Because when you buy the market, you get stopped out with a sell limit or sell market, right? So this was probably more liquidity being purged, taking out those buyers that were buying higher lows, and then creating a lot of what looks like selling pressure. But because price literally went higher the next day, we can assume that this run lower was just a liquidity grab. And since we took out yesterday, or that day's high right here yesterday, then we can say that this is a trap. Now, that does not mean that Bitcoin is going to surge up from here. It is what I think is going to happen. But what I think is going to happen, what actually does end up happening, are two different things. We could set a bull trap today or tomorrow just as easily as we set a bear trap on Thursday. All right. So don't get too caught up on the fact that a bear trap was set and sprung this week. But, you know, the momentum on the 4-hour looks good. And the fact that we are above the 21 exponential looks okay. One last thing with the session volume profile that's important. Here you can see is March's opening price. It's actually this number right here, 84,297. That's March's opening price. So you can see how yesterday the point of control migrated higher. This is from profit taking as well as new short sellers entering the market, because they're trying to sell March's open, because we don't need to go above if we're going to continue to the downside. So this is an opportunistic place for shorts to attack the market again, because March is currently in a downtrend, and we did make fresh yearly lows. So a lot of sellers are going to look at this as a bear flag. Let me go ahead and make price a little bit bigger, drop off these moving averages, and I'll show you what I'm talking about. This looks like a bear flag. If you take, say, this little arrow symbol here, this is your flag post. And then if you take your little trend line tool here, boom, and then get your bottom here. Boom. This is a textbook bear flag pattern, but we don't trade patterns. This is a bear flag. So if it does break out, obviously that's going to be good news for the bulls. But if it does hold, that's going to give bears further confluence to look for shorts. If we liquidate Friday on this move today or tomorrow, liquidation of Friday is going to come right here. All right, so Friday liquidated Wednesday and Thursday. Friday liquidated both those days. So this was a fresh weekly high. Now we pulled back. So if we liquidate this, that will make another fresh weekly high. But you got March's midpoint setting right above that. This is another objective level where people will potentially look to short again. So you can see why we haven't seen a massive breakout yet. There's still a lot of sell pressure happening on Bitcoin right now. Going out to the daily time frame, if we look at this on a daily, it doesn't really look that great, does it? Typically when you see exhaustion or sell side exhaustion, that simply just means that a lot of your bigger sellers, your people that are, moving the markets, those people are covering their short positions. We don't know why they cover their short positions. It could be because they don't think it's going to go down lower, or it could be because they're waiting for a higher low to reattack. But usually when you see that kind of sell side exhaustion, you would typically get like a bullish engulfing daily, right? This is not. We did take out the previous day's low, but we did not take out this day's high on the next day. So if anything, one could just arguably call this a liquidity run lower and then just a normal standard pullback or making the bear flag. Now, I have a long position on right now. I took the long when we liquidated this low, and then yesterday I took an intraday long when we got the 10 o'clock news. It caused Bitcoin to pull back briefly right here. This is where Bitcoin had pulled back. It also pulled back right at daily resistance. So if we go back into the daily time frame real fast, not real fast. My internet's good today, so I'm not exactly sure what's causing TradingView to be so laggy and slow. But anyways, if we go back down intraday, this is at daily resistance level, and it was just below March's low. So I'm sure some traders were trying to short it right here. Here's your 9:30. This is when the New York session opened. So Bitcoin had already had a pretty good run higher. And then we got the 10 o'clock Michigan Consumer Sentiment Report. And the last time we got that news print, it was also a very bearish day. So you got a bearish move down here. It ultimately held 30-minute support. This is where I entered the position. It was a 618 retracement of yesterday's range. I was looking for a 50% retracement, which was a little bit deeper. It was like down here. We didn't get it. It literally, if you look at this on the 5-minute time frame, it just could not push any lower. So I went ahead and took the long trade. Right there's the news. That's your 10 o'clock. You had downside continuation. Then there is that push a little bit deeper. This is the 618 test. And then another 15 minutes, it looked like it was going to break back down, but ultimately it didn't. I went ahead and took a long position there. Another reason why I took a long position there was I also took a long position on the ES futures right here. You can see this is a one contract. This is a small account, but I took a trade on it this morning and I made my 10 points here, more than 10 points when it shot up. So I closed that position out. And then when it came back down to test daily support, which was right in this area, I will show you right here. Go to the chart. This red line is daily support. This closed under, but if we were going to see a bull trap, which we did, then I wanted to see intraday prices hold at daily support. So let's get rid of this line real fast. So this way I can show you that. Remove drawing. All right. So if you look up here, well, it didn't get rid of it up here. All right, there it is. Now it's gone. So right here, intraday, you can see how prices was acting crazy around daily support here. But then the VWAP came in and started to support intraday price movements. This is daily support, this red line. We had the spike up. That's when I took the first trade off. I bought at daily support, took the trade off once I got my profit target. Then when we came back in on the news, I took another position, one that I could hold. I was looking at it like, I've already made my day trade money today, so I'm going to take another entry. If we are going to see upside expansion, making yesterday a bear trap. All the other stocks were bullish. I mean, at that time, there was like 420 stocks that are bullish in the S&P 500, only 80 stocks that were bearish. I was looking at this as a bullish pullback at daily support. I bought it, and the rest of the day went like that. So here is that position again, setting right at daily support. And I'm still holding that trade. I did have a stop loss on this trade, and it almost got triggered with this wick right here, but it didn't, and it moved on, and I'm still in that position. Now, because the market's closed, the broker closes out any unfilled orders on the futures accounts. If you had a stop loss and it's gone, that's why, right? Your unfilled orders get closed out. When we open on Sunday, if we gap down, then I'll protect this position. I don't really see us gapping down way back under, but we could, right? It is a risk, and it is an unprotected risk that I can't do anything about. But I will be able to close this position out Sunday night. I won't have to wait until Monday morning like you would if you were in an options position. But anyways, going back over to Bitcoin, that is also why I took the long trade here on Bitcoin. I took the long trade on the ES futures. At the same time, I took the long trade on Bitcoin. Here is that trade right here. So basically that happened right in this 4-hour candle. Price traded down, and I took that entry. You can see right here that realized profit is $1,000. That's because on this move up, I was looking for it to liquidate Wednesday's swing high. When it did that, I exited on a 75% take profit. So take profit on 75% of the position. Then I move my stop to break even. So if that resistance does in fact end up holding on Bitcoin, that monthly open, or if it liquidates Friday's swing high and then rolls over, then obviously this small remainder of the position will get stopped out. I haven't made up my mind if I want to close this position and take a new short, but I am pondering it because on the chart, it literally does look like a bear flag. So let's go back on the daily. Okay, so what are we going to do next week? If you're looking for short side entries for next week, my best advice to you would simply be take a small position size here, right? You don't have to take a full size position. You can take like a 30% position size. That way, if you do get a run above this high and then reject, you can enter in there with a full size position, and that would bring your cost basis up a little bit. And then you'd be a little bit better suited for a run lower. And this way, if you still get that move higher, and you get stopped out, you won't take two losses, right? You won't take a full-size loss here and then take another full-size loss there. Because if I know my retail traders, I know you guys are levered up. So you're not going to have a very wide stop loss. Generally, people love to take trades with very narrow stop losses and very heavy leverage. That's one way you could attack this short trade with only risking like 2% of your portfolio. You just have to take the first entry with a smaller position size. Obviously, sometimes you're going to get in with that smaller position size and then price is just going to go. I wouldn't suggest chasing it. I would just leave that small position size open. Because here's the thing. If we get a reversal on the VIX and it starts going back up, then that means Bitcoin's price ranges are going to be huge, like this or like this. So a small position size is still going to make quite a bit of money as you're entering it at 84.3, and this low down here is more than what, 76.5, so almost $10,000 move lower. Yeah, I wouldn't mind catching that with a half a size position or a 30% position size. Absolutely free money, and as far as I'm concerned. So that's one way you could play the short. The long, obviously Sunday you're going to have a new weekly open. And since this is the area that held, if it is going to have a pullback again, I don't think you would have to come all the way back down here. Just my thinking. Doesn't mean it will or it won't. I don't know. We could watch the midpoint of Friday's range for potential pullbacks to that area. All right. If we get back down to this, I would probably assume that it's going lower because this low is just right here. So since we haven't seen that massive exhaustion on the sell side, since we haven't seen the buyers just FOMOing into this thing, it is a slow bounce. So you have to be very, very careful. All right. Either way, this is a good area to look, and people literally are taking those trades as I'm speaking to you. because we can see that with the session volume profile. So your point of control is right up here for Friday, then it's right here today. But this will probably change today depending on what happens today, because this is where the majority of the volume's trading. So we know people are making decisions at March's open right now. Going back to where we're on the daily, let me go ahead and pull up the moving average so you can see where you're at. We do not have a buy signal on the daily yet. The best bullish signal that we have right now on Bitcoin is on the RSI. Because when we made this bear trap here, this is when bears have the momentum, right? Being under the 50 means that it is still bearish. But when you're under the 40, that means the bears also have momentum on their side. So this does mean that on the daily time frame, the bulls have regained some of that momentum, but it has been a fight. I would not be looking for shorts anywhere down here. The only place that I can look for a short on Bitcoin right now is right where this monthly open is, and right up in here, because the 21's up there as well as the midpoint of March's range. The only two places that I would want to be a short right now. Unfortunately, I am not short, but that may change depending on how today closes. Right now is a short. That is the technical trade. You're still under the 50. You're still under the daily 21. You're struggling at monthly open. If you're going to see downside continuation, if this is leg one of the monthly candle expansion, then you have to look at it with leg one, consolidation, leg two. That is the technical trade to make. The hopium trade, the bullish hopium trade, is we have broken back out of bearish momentum, and that's it. On the daily, the technical trade is to look for a short, because the VIX is still elevated. You are under the 21 and you are under the 50. That does not mean that your short trade will work. It does not mean you will make 1 penny from taking that trade. It's just if you had a program or a bot running your trading account, your program, your bot would take the short. I hate to say that, but we have made fresh yearly lows in the month of March. There's no reason to consider this to be bullish yet, and I wouldn't even change my bias to being bullish, even if we're closing dailies above the monthly open. I would need to see bullish continuation. I would need to see a bullish pop above the 21, maybe a retest of the 21 from the top side before I could change my bias to bullish on the daily. The weekly still says you're very weak. All right, back to your scheduled recording. But right now, this is literally the only bullish signal you got. And it's not a great bullish signal. It just means the bears lost steam right here and the bulls have it. So at least for the last 2 days, the bulls have been in control, but they're not being able to really get anything going either. So that is concerning. Weekly expected range, we can see that January's low comes in line with the weekly expected range high, 57.78. The weekly expected move lower, that is priced in by the options market anyway, 54.98. It's a 140 point move. That's what we're expecting in next week's range. Since we've broken down and been bearish, the weekly expected range lows have not been holding. I just want you to be able to look for opportunistic places in the chart to take your trades. That is all. And we are at one of those areas right here, right now. So if you want to look for shorts Bitcoin, there you go. You guys have a phenomenal rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.